Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. A special welcome goes to new people. And for you, I just explain the meaning of the title. And it makes sense pretty much. What we're trying to do here is create a plan for the upcoming week. And as I like to quote traders when they say you plan your trade, then you trade your plan. So it makes us more prepared, less reactive, and more organized in trading. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading since June of 2000 when I started as a prop trader in New York City. I did it for about 11 years, intense day trading, and then I moved away from it and started also to mentor and educate others. And I'm very happy of this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar, as usual, we talk about indices, stocks, commodities, Forex. We'll speak a little bit about a big picture, what happened, a little bit of fundamental things, a little bit of economic events in the form of economic calendar. We'll look through that as well. Risk warning, everything we do here is purely educational. Of course, we do not suggest any trades here. Social media channels, please feel free and feel encouraged to follow us on Telegram, X, and YouTube. As you know, YouTube is my favorite because you have webinars there. All the webinars that we do at AvaTrade are being recorded and posted on YouTube, so you don't miss out. You always can just open the YouTube and browse through webinars and watch whatever webinar you missed or would like to watch again. So if you are watching this on YouTube, please don't forget to click likes if you like it, of course. Don't need to fake it. And feel free to share it with people that you think might benefit from it. Also, write the feedback. If you have any questions, feel free to write it. Okay, so we'll go a little bit through the, what's been happening this past week. As you know, markets sold. We had a big sell-off on Friday after the NFP numbers came out. The numbers, I was just thinking about it. I really wish that one day we'll come to the time when the good news become good news again, because it's been all messed up or mixed up. So good news, take a look. We added a tremendous amount of jobs, 256,000 jobs were added, unemployment fell, and so on. Market goes down. Why? Because the good news is bad news, because the Feds are most likely going to be holding those rate cuts for further down the, as we go. So market go down. This is a nice article here you can read on marketwatch.com. The title says stock market Trump bomb nearly erased thanks to bond sell-off. What's next? Now, NVIDIA was also in play. This past week was very interesting. We had NVIDIA, we'll go and take a look at the chart, but NVIDIA made all-time high, and it went reach the 50-day average. So dropped, went making all-time highs and then dropped to 50-day average on the same trading session. That's crazy. So NVIDIA went down after the conference. They didn't like, the plan sounds good. The CEO was talking about the long-range plans, but as of now, I guess the investors were not so excited, so NVIDIA fell, and that also affected the market, especially the technology, to the downside. Now, here's the illustration of the Fed's upcoming interest rate decision, and that's going to happen 29th of January. Take a look at the dynamics. About a month ago, the probability of another rate cut was not high, but still almost 21%. A week ago was 10.7%. 1 day ago, that's after the NFPs, it dropped to almost none, 3.2%. As of now, it's about 6.4%. So you can find it also. Just type CME Fed's tool, and you can follow actually the dynamics of that prediction on the Fed's decision. So as you know, again, like I said, the good news is the bad news, because it just holds the Feds from further cutting the rates. Economic calendar, very important to mention that this is an important part of every trader's routine. So you want to know certain things. You don't want to miss, especially things like NFPs or inflation data or interest rate decisions. So, it's secondary what you're going to do with it. Will you trade? Will you put it on hold and just watch the market? But knowing ahead of time, it just saves you a lot of trouble because you don't want to see out of nowhere your positions jumping either up or down and you have no idea what's happening. So this is public knowledge, public information. You can find it on our web trader or the mobile app. You can Google it. It all comes from the same source and you can reach it ahead of time so you'll be prepared. So here, as you know, I take out only high impact events. There's so much more. You can browse through them. You can filter whatever makes sense to you. The times here, I set GMT. So let's just go through it really quick. Tuesday, we have PPI numbers from the US. Wednesday, busy, we have CPI numbers from UK. And this is the first CPI number since this drop of the market and the last CPI numbers before the next decision. So it's going to be important to see. Again, just to explain, especially for people that are a little bit away from it, the Feds are on the course to bring things normal, to cut rates further, to bring it to a normal situation. And the main reason why they're not really aggressive towards it is the inflation's been super stubborn. It did improve a little bit, but still it's high. It's far from the target of the Fed's of 2%. So CPI numbers, when they come out, they're very important, and you could see the volatility in the market increased. So that's on Wednesday. Thursday, we have employment data from Australia, CPI number from Germany, and retail sales from US. Also very important. We just finished the holidays, so these numbers for the retail sales are going to be reflecting what's happening in the US in that area. Friday, it's all about China, GDP numbers, industrial production, retail sales. You know, China has been struggling. We'll take a look when we get to the charts. And retail sales from UK. Also, we're kicking in the earnings season. So this week, I'll mention to you the companies when we get to the stocks, but we're starting reporting earnings for the fourth quarter of 2024. So that's another aspect that will be affecting the stock market on a daily basis. Okay. 10-year yields, as we said, reaction was very strong to the upside. This is the weekly chart because on the daily it doesn't show enough, but I just want to illustrate for you that we just broke through the April numbers here, and the yields pushed the dollar higher, created sell-off, or not created, but added to that sell-off pressure on the market. So this is the situation on the yields. Let's see if we come back to retest this level, or we might continue further up. I guess we'll find out soon. Now, as a tradition, the biggest gainers and the losers for the week. So these are the futures mixed with commodities and indices. So the champion of the week was natural gas, almost 19%. Copper was up 5.3%, platinum 4.6%, crude oil was up 3.5%, and corn 4.49%. On the downside, cocoa gave in, sold almost 6%. Nasdaq down 2.4%, sugar down 2.2%, S&P's 2% down, and Dow Jones down 1.88%. So these are the futures. And in the Forex or currency world, on the upside, we had 1.14% on Euro Pound, almost 1% of dollar Swiss. And to the downside, with big selling here, down 1.72% on pound dollar, 1.47 on pound yen. Aussie down 1%, and New Zealand down almost 1%. So these are the gainers and the losers for this past week. Okay, let's move to the charts, and we'll go through some instruments and trying to see what's been happening there. Now we'll start with China as usual, as we speak about indices. But before that, I just want to give you the numbers. So for the week, we're talking about the actual index, not the future. So Dow Jones Industrial Average fell 697 points, or 1.6%. The S&P index was down 1.5% and closed the week down 1.9%. The Nasdaq was down also 1.6% on Friday, at 2.3% for the week. So as you could see, big selling in the market. So China, we just broke this support here from November 26th. We're below the 50 and 100 moving average. We're kind of in the air at this point. So maybe 200 moving average could be the next stop. We'll find out. Again, as we saw on the economic calendar, we have some data. I think beginning of the week also shows trade imbalances, which is also affecting the index. So we'll find out how things develop. So that's on China. Now, Japanese index, Nikkei went down as well. And the strength, first of all, it went down as US indices went down. And also the strength of yen added the downside pressure as well. We'll take a look at yen when we get to Forex. So we right here on the stick of 100 and 200 moving averages, we're kind of holding it for now. So that's on Nikkei. Let's take a look at US indices. As we said, the sold. We did break through the previous support here, and we're kind of in the air also below the 50 and 100 moving averages. And let's see how this week will play with the CPI and further moves in the markets. Nasdaq looks similar, and just unlike S&P is actually a bounce of 100 moving average here. So we're holding this. It looks like a triple support here, triple bottom, as you could see, almost exact the level. So we had the two bottoms here, and this is a key level. As you could see, there was the resistance back in July from which we had the sell-off. So let's see if we manage to hold this level, or we might just drop through it. Dow Jones look weaker. We did break through this double bottom here, and we could be on the way of retesting the next support or 200 moving average here. Let's take a look at Russell. This is a small cap, usually reacts stronger to either up or down moves. As you could see here, this is the weakest, and we just broke below the 200 moving average here on Russell 2000 small cap. Germany. Germany came into this trend line that initially withdraw. Let's see if it continues in sympathy of the US market, or we're holding it. Usually the European indices at some point follow the sell-off as well. UK, we are looking kind of strong here, but a lot of choppy trading in UK. So, you know, it's all over the news, all over Bloomberg. I was listening to the report that there's a big concern about the economy in UK. Also, investment into the country, into the UK business went down significantly. So I guess a lot of uncertainty when you see these tails up and down here. Nevertheless, we are trading above 50 and 200 moving averages. The only thing we just triggered a few days back, we triggered this dead cross when the 50-day moving average crossing below the 200. So technically, some analysts might consider this as a sell signal. Okay, that's it with indices. We'll move to stocks. And let's start with NVIDIA. I'm going to bring the MT5 for that. Here's NVIDIA. That's what I mentioned to this happened in one day. On the 7th of January, we gapped to the all-time highs on NVIDIA, and then we did close right on 50-day moving average. Look at this move. The range of this candle is almost, the top is almost 153, which is 152.95, and the low 139.91. That is $13, right? A huge move to the downside, and of course, Friday we did go down with the market. It was a gap and continuation, closing at 135. So we'll continue following, of course, NVIDIA as a leading participant in the AI business and technology supporting AI. Let's take a look at the, I call them big boys, the Magnificent Seven, the big players. Apple, as you could see, after the NFP numbers came out, the futures reacted to it, and when the market opened, of course, they opened with the gap, and that's the reason the important numbers usually happened about an hour before the market opened, and that's why it's a public information, so everybody could be prepared. And when the market opens, they already know what's happening. So Apple down. Tesla actually looks very strong, and it's very important to notice this relative strength. See, it didn't sell neither on Thursday or Friday, so it is holding. So in case the market decides to run up again, Tesla probably will react stronger than others. Just an idea. Doesn't matter. It will happen. Netflix sold with all the stocks gapped and lower, and important, we just broke to this support, after which we made highs. We had double top here, so we might see a little bit of correction on Netflix. Meta actually went up on Friday. That's very interesting. So, you know, they're changing certain things about the fact checks and other things. I'm not going into details, you can read about it, but this is very interesting as since those changes give a boost to Meta, and on the big sell-off on Friday, the stock actually went up. Important to notice. Google, it did go down, but we are holding this important level around 190, 160, as you could see here. We are holding it nicely. Amazon also holding to that level here. Doesn't want to give up. Microsoft has been weakest out of the group. As you could see here, we're far from the all-time highs, and we keep on having the downside pressure. Intel back to square one. We're back to retesting this $19 area. The stock, I mean, the company is not doing so great, and it reflects on the price of the shares. Oil stocks, as oil went up, it's very interesting. ExxonMobil didn't go up at all, and Chevron did. So something's happening here in Exxon. Maybe they're having issues, but you know, like when you do your EKG, it reflects the way your heart works. So when you look at the chart, it reflects what's happening in the health of the company. So that's very interesting. Again, Chevron had a nice move of this recent move in crude oil, and Exxon did not. Okay, so that's oil stocks. Now banks also reacted. It was painful for them, painful, the NFP numbers, as you could see here. We did gap down and continue closing at the lows. JP Morgan holding to that 50-day moving average. It looks like it assumed the leading position again in the group. Bank of America also holding that 50-day moving average, and Citigroup actually holding nicely. So that's as far as stocks. Now, as I said, we are starting the earnings season. So for this week, we're starting the earnings with banks on Wednesday. Citigroup, Goldman, JP Morgan Chase, and Wells Fargo are reporting on Wednesday. And then on Thursday, we have Bank of America, Morgan Stanley reporting on Thursday as well. And also another important company is reporting, United Health You know, it's been a lot of issues there since the CEO got killed in New York City. Uh, this company has a big weight on Dow Jones index, so it is reporting on Thursday. So it was a big drop since that unfortunate event of murdering the CEO, and then we bounce here. So they are reporting on Thursday. Okay, that would be it with stocks, and let's move to commodities, and we'll go through the gainers and losers. We'll start with gainers first. Natural gas. Where are you hiding? Here we go. Natural gas has been strong. You could see here. I don't know why this is doing here. Okay. Again, just to remind us something that I just shared with my team again. If you remember, if you've been here for a while, at some webinars, I mentioned this 4-year cycle that it shows on the chart. It's just my theory. 2016, 2020, 2024, around March, April, we started to move up. The 2020 was a strong move. And here, the same thing, we started this move in March, April, and we're continuing higher. Now, the question is, are we continuing from here? So far, we did break to the previous resistance, which is a good sign. Just to remind us, the peak of this cycle in August 2022, natural gas was at $10. It's not an easy instrument to trade. As you could see here, it's shaking people up and down, but it's slowly. This is the back to daily chart, making a higher lows and higher highs. We're slowly stepping up. So that's natural gas. Had a very nice week here, as you could see, up more than 18%. Copper has been up, and it's a mystery because Chinese index is not doing so great, and copper usually reflects or goes kind of in sync with China. So copper had a strong week to the upside, up 5.3%. On the daily chart, we hit right into the 200 moving average. We had on Thursday and Friday, we had spikes above, but we didn't close above that 200 moving average. So we'll continue watching that. Platinum, it looks like metal are back in fashion, up 4.6% for the week. It was a strong move that started right off the new year, and we continue high here. We reached the level of 990, 994, 995. That's what we sold last time from. We continue watching platinum. Crude oil. As we said, crude oil had a nice run. We came kind of a triple top here. This was August 26. This was October 8. And we just hit that level again and rejected it. So strong move again. Strong move, maybe because of geopolitical things. Trump is coming in White House in 8 days. So who knows what this means here. But technically, we know now that it's around 77. It's a resistance, and so far we're not breaking it. But on the supply side of crude oil, Trump coming in could probably mean more oil and lower prices. So I'm wondering what this move means. Maybe there's something we don't know. Maybe something planned as far as military actions in Middle East or anything like that. I guess we'll find out soon. But the chart is reflecting strength of crude oil here. Corn. Where are you, corn? Here we go. Corn, it looks very strong here. Take a look. We've been, this is the weekly chart. We've been moving nicely after the lower low here, and we're facing strong resistance at current levels. As you could see here, this was exactly where the sell-off started, and we reached that level with a lot of struggles. So just minimize a little bit. See here. It's a very strong level here. You had support, back to resistance. A sell-off started around this level, around 470. And here in one day, we had a huge move here and stop right there. So it could be that upside move might slow down here, or maybe we see some correction to the downside, or we might even see the boost to the upside. Depends on the fundamentals, on what's pushing this move fundamentally. That's corn. Now, cocoa and sugar were the losers. Again, it's hard to call cocoa a loser in general after such a move here, right? But for the last week, it was. So on cocoa, recently we made all-time, not all, yeah, I don't know if that's an all-time high, but definitely for a while it was. As you could see on daily chart, we had the gap on Wednesday, Thursday down, Friday down. We're still holding above this 10,300 level. For the week, cocoa was down 5.86%. Sugar is the other one that's sold. As you could see here, it's been channeling down for a while. And on the weekly chart, it had a sell-off here. We are approaching this 1580, 1570 level from which we had this huge move to the upside. Also, as you could see on Friday, the last day of the week, we had a spike up and down and closed almost flat. But that shows that they're pretty much not sure which way to go. Okay, so that's commodities. Again, natural gas, copper, platinum, crude oil, and corn was strong last week, and cocoa and sugar were weak. We forgot about gold, and it's very important. Gold, when NFP numbers came, initially reacted to the downside as the dollar went up, but then it kicked in, I guess, with safe haven as the stock market started selling, gold went up, so money came from risk off into gold, it looks like it. So as of now, we're still remaining in this tight channel between 2604 and 2720. You could see clear that is a clear channel here that we are observing with occasional drops below, but the upside still holding here for a while. So we are in this channel. That's about 115 points, and we're remaining there. So that's gold. Moving to FX, we start with the dollar index, big boost to the upside. The 10-year yields pushed it. The idea of Fed's not really rushing into another cut give another boost to US dollar. Now we're kind of in the air here, right? When we broke this 107 level and we tested the high and then we just broke through it, we could be moving higher. I guess we'll find out as time comes. The top of this candle, 111.15, it could be the next stop should we continue moving higher. We can also reverse and take some profits here, I guess, and check for the support. It looks very, very, very strong, as you could see here. And fundamentally, things looking good for dollar. Also, Trump, again, Trump coming in, it's all about make America first, making dollar strong, and so on. It's not necessarily the best thing, right, for the companies in the US that exporting a lot of goods, as they're not going to be so happy. But again, we'll find out what's next with dollar. Now, specific pairs that were gainers and losers for the week. One of the gainers was euro pound. Had a nice week to the upside, up 1.14%, and on daily chart, as you could see, we hit right into 200 moving average here. Dollar Swiss, same, was second strongest, 0.91% to the upside. Now on the downside, we had pound was a downside champion. Pound dollar strong move to the downside. Take a look. If we continue this way, we might be trying to retest the low of October 2023. We just broke the previous support here. So we're down 172. Daily chart, it looks at free fall, right? Pound yen as well. 3 consecutive days to the downside. Okay, some traders might consider it a possibility of reversal. The 3 candle rule, we'll see. Aussie dollar and New Zealand dollar went down, especially not just the strength of a dollar, but also weakness of China, as we saw. They just broke through the previous support easily. Again, the free fall on Aussie. Let's take a look what's next. We actually broke on the weekly chart through a very strong support from October 2022. Let's see if anything on monthly chart is showing us. Wow, doesn't look that great, right? It might continue again. It could just decide to reverse and go higher, but as of now, as you could see, it's losing supports one after another. So that's Aussie dollar, New Zealand dollar, similar picture. They just continue lower, but here we came to a key support on weekly chart, which on Aussie we already broke through, right? So we're coming to that key support from October 2022. Again, on Aussie, we already broke it, right? So those are the big losers. Both Aussie and New Zealand down about 1% against US dollar. Now, Euro dollar. We're holding this, as you could see, as the dollar went stronger, made a higher high. Euro actually didn't break this previous low from January 2nd. That's a good sign, actually. If dollar decides to weaken, we might see a pop-up in this one. Now, let's take a look at yen. As I mentioned to you, with the Japanese index selling, a lot of it to do, of course, with the local currency, and yen has been gaining strength. Swiss yen down, Aussie, of course, down, Canadian, even Canadian, that went up a little bit on the strength of the oil, went down against the yen. So yen across the board, it looks very, very nice. Again, fundamentally, just to remind us, Bank of Japan is facing that decision every time they have a meeting. Some analysts suggesting that they have to take the action to increase the interest rate to fight the inflation. So we might see that again. Sometimes they actually like to do things by surprise. That includes interventions and interest rate decisions. So anything is possible. Just another one, when you look at dollar yen, dollar just went up significantly against all the major currencies. And if you take dollar against yen, it's been sitting here, hugging this level here around 157.5, right? We did have an initial spike to the upside, but it went down. So it looks like money went yen. Now again, the same way it went to gold, maybe yen is kind of reclaiming the old status of safe haven as well, right? The moment the stocks indices start selling, yen actually continue higher. Take a look. The similar, what happened to gold? See, initial move of dollar yen to the upside, but then when the sell-off of the stock market triggered and continued, the dollar yen sold significantly, so the money went into yen. Okay, that concludes the Forex, and let's take a quick look at cryptos for dessert. This is Bitcoin, as was trading in this area since this significant move to the upside when Trump won the elections on November 5th. We started this move, right, since November 5th, straight up to almost 100, and then was a struggle. We did break above. I think the highest so far was around 108,000. Then we went down again, up again. So this rectangle here, we've been trading in it for the past few weeks. Struggling to break above, but also not falling below 90,000. XRP was a strong move yesterday, as you could see here. There was a speech of the CEO. The SEC should take some actions. I think there's a new SEC head coming with Trump becoming a president on the 20th. So it's very, very important to cryptos, as the current SEC administration was very tough for cryptos. XRP is the one suffering a lot. So as you could see, this a big move on Saturday, and today we're correcting a little bit. So we are about to, right? We just came out of $0.50 when the old cryptos moved on Trump's victory, and we had a nice move to the upside. I think the highest was 289, and then we're holding this $2 mark here. Okay, I think I forgot to mention something here. Let's take a look if I have that slide. Here we go. This is for dessert, just to entertain us. So this was provided by Dow Jones Market Data as of January 10th, close prices, right? And this is titled Elections to Inauguration Day Performance. So it starts with 1952. So the period between the elections to actually inauguration to president, to say what the markets did on that time. So when Joe Biden came in, actually, between the election and inauguration, the market went up 13.5%. That's on Dow Jones. S&P is up 14%, and Nasdaq up 20. Now, as you could see here, we had a huge move on the markets after the elections, but we came back actually in a negative territory on Dow Jones. And we only up 0.8% on S&Ps. Nasdaq still up nicely, right? So these are the numbers. Again, just the illustration and see how things are. But it's hard to judge because with a nice move. You know, there was not really a Santa Claus rally because I think Donald Trump played the role of Santa Claus back in November when the market made a huge move. Okay, that's it pretty much. Please don't forget about the our channels, Telegram, X, and YouTube. Click the likes, subscribe, write your comments. Thank you all, and let's just summarize really for what we spoke about. We have a big week. We're kicking in the earnings season. We have the CPI data coming in that the Feds are watching closely. We had the sell-off on the market, and you know, the public needs to digest it over the weekend. So we'll see what's next this week. Are we going to see continuation of the sell-off, or some participants will find this as an opportunity to enter at lower prices? We'll find out. Have a wonderful weekend. Have a successful week, and we should be back next Sunday. All the best.